the nation's number 1 and number 4 property and casualty insurance companies, State Farm and Allstate, are gone. They are gone. Bye-bye. See you, California, and thanks for watching our show.
Hey, but the commercials are still going.
Oh, yeah, because they're going to still insure whatever else they can. But for property, you guys, they are gone. I mean, in summary, you're talking about multi-billion-dollar disasters that have been happening, of course, in lots of parts of the country, but specifically because of California, you got earthquakes. We hear about mudslides when it actually does rain, and then of course you have fires and wildfires, and so this is all adding up.
Yeah. So one of the things I read was that California is a very particular state, which comes hand in hand whenever we have one disaster, another one's right behind it. So, I mean, that along with a whole bunch of other stuff is really pushing the needle on, people leaving the insurance space. And then a lot of our clients will suffer from that as well. So,
yeah, no, absolutely.
Definitely keep
these wildfires that we have are just uncontrollable.
Yeah.
And then the cost, right? When we're talking about San Diego medium sales price is $890, man, that just takes it up a big notch.
Yeah.
So we got that. And then let's not forget, guys, the most important, our state laws.
Yeah. Yeah.
It doesn't allow insurance companies to be that profitable.
Yeah, there is an issue because you have to kind of petition to increase rates. And one of the things I was reading in preparation for today's show was that while inflation costs and build costs have dramatically increased by 20, 30, and 40% depending on material type or labor or how you're going to quote averages. If you have to petition to even just make a 7% rate hike to policy premium, but then that could take even 6 months to take effect, you have this like lagging decision making process. You're like chasing this catch-up provision, which means you really got to be sitting on a lot of cash.
Yeah, absolutely. And building right now, it takes time.
Yeah.
You're trying to get your permits and all that stuff takes time. Just because your house was there and it got burned down doesn't mean that it's going to go back up right away. You have to go through the same process like anybody else will. And that's one of the biggest issues that we're facing right now in California because of the whole ADU, the SB 9, SB 10 rule being passed. We're starting to see a delay on all these permits.
Yeah, there's actually a couple of years ago, and this isn't as relevant today as it was maybe 4 or 5 years ago when it happened, but a neighbor down my street in my other neighborhood, their house burned down, caught fire, had a fire in the garage from the water heater, of all things, the water heater. But the house burned down, and it was 5 months before the demo even started. And then they were out of their house for another 8 months after that. So they actually were out of the neighborhood for 13 months, which is not only just the replacement cost of the home itself, but also putting that family into a temporary housing and covering that while their house was being rebuilt and all those timelines were in place.
Wow, that's crazy. We should have brought him on the show.
Yeah, well, that was a hard day to watch. Literally stand there and watch their house just completely go up in flames. Even the fire department was doing their job, but by the time they got there, it was half gone already.
That's crazy.
One of the things that stood out for me was the cost of reinsurance going up higher. So I read right here that says reinsurance costs have been rising fast in response to expensive disasters around the world in recent years. Reinsurers' risk-adjusted property catastrophes rose 33% on average at their June 1st, 2023 renewal. So that means that 33% just for insurance on insurance basically went up. So that, along with the cost of rebuilding with the cost of insurance for insurance going higher, now gets tacked into the whole mix.
And that 33% is on top of the previous year's 25% increase. So you had a 25% increase and then a 33% increase on top of that.
What was on top of that?
So, yeah, I know, right? That's like just stacking that cost of reinsurance. And then again, that brings up the question of the solvency issue with insurance companies. Maintaining their solvency is why reinsurance exists, is so that they don't necessarily have to go belly up when there are massive claims that have to be paid out. Yeah. But then that puts pressure on even the reinsurers. Are there reinsurers for reinsurers that reinsure reinsurers? I don't even know. That's a good question. If you're a reinsurer of reinsurers,
it's kind of like Peter Piper picked a pack of pickled peppers. Right? But hey, Brian, you're at least on a positive note, they renewed it.
Yeah,
right.
Yeah.
I seriously, this week alone, I got 2 texts from clients saying, "Hey, Will, do you know of any insurance companies that you can recommend because my company would not renew?"
Yeah.
Wow.
That's not cool.
So further in the article, they speak about that where there's a law in place that says that the insurers can't change or cancel your or not renew your policy within 1 year of the law that was stated here in California. Oh. But I mean, you never know. It might have been 2 years already since they last bought, but they do have that provision from the government that allows them for 1 year to basically figure it out after they stop writing those policies.
Got it. I
Yeah.
did not know that. That's good. That's good information.
And that story right there is going to be a recurring story, not only through 2023, but into 2024, because it does not look like insurers are coming back to California with any sort of haste or speed. Just some of the insurers that have left California recently account for 21% of the policies that are covering the state's properties right now, or of the properties that are insured. State Farm, Allstate, Farmers, that accounts for like 21%, and that's a lot. And so the state will have to do something from a policy perspective, to your point, to eventually incentivize them to come back. But there also has to be the financial, I mean, it's kind of like there's a political willingness. Okay, that's one part, but then there has to be a financial benefit for them to do that. And I'm not necessarily taking a side here, but it does feel right now that we're at this gridlocked moment, and I honestly don't see a way out of it yet based on what I've read here.
Yeah, absolutely.
No, and it's tough because, I mean, you see a lot of people that get squeezed out because they're not able to get that insurance. And it's really tough because then what do you do when there's no big insurer to be able to, secure your property? And that's some of the problems that some, prospective homeowners are going to be facing down the line, and probably already are running into it right now. But I did read something in the article that stood out to me, that even though that, they won't insure it, there is a California program that allows for you to still go through them. But at the same time, it will come at a higher cost. It does get pretty expensive, but there is solutions for, to get it insured. It's just going to cost a pretty penny.
There is, just like everything else is changing in the market, right? Inflation, everything that's going on. Before, we used to see, like, if we had a purchase price of like 600, so we would put like 20% usually is the rule of thumb, but I would always use like 75, 85. Now I am missing what that is. So it's hard to pre-qualify people right now based on just, it's a sales price, so it's going to be that. Like, now we're trying to say maybe it's more like $150, $200.
And it's a $500 house.
You were here in Eastlake. Yeah, it's like, you're in a fire zone, but there's just small bushes around. You're like, wait a minute, I know my home, I know my area. Like, how is that considered a high brush area, fire brush area? It's like, it just doesn't make any sense.
Yeah, and I know it's specifically to our neighborhood. It has to do with the general proximity to the wildlife preserve and the park that's like going to never be developed. But yeah, it just happens to be close enough, right? And then, you go a little bit west of where we're at now, and you get towards like the Terra Nova area, Rancho Del Rey, and there's canyons right there by East J Street, and that is considered, your backyard is abuts a canyon, which is all just brush and shrub, and so there's a lot of that. I've heard from my friends in insurance to say, we just don't even do it. We can't do it. Like, we literally go to Google Maps, we look up the address. We go, you're next to the canyon. Yeah, sorry, we can't insure your house. Like, so now you have like Google Maps and the person deciding if you can get insurance or not.
So now when we search for homes, we search for canyons.
Or no, we can't search for canyons. We're not going to get insurance.
Well, that's what we say. We search for canyons. To not be around that home.
Avoid that.
Avoid it.
One interesting thing that I read as well was that if the company like a State Farm or Allstate can insure it, it goes down to the state, right? So then where does the money come from? The state, obviously, from the people that pay taxes. So how do you guys feel about taxpayers, basically footing the bill for the insurance policies in some sort of way?
It's actually a little bit of both. So it's not just taxpayers. Also, it's the providers in the state of California that do write insurance. There's a part of that goes to that coffer, if you will. So that the California Fair program is a mix of money. It's not just taxpayer money and state money necessarily. It is actually money that's peeled off from the insurance carriers that are providing insurance in California. Thus, also begs the question: if they're leaving California, that's less people contributing to the fair coffer, which means that the fair expense will probably go higher if they are going to continue saying these things about the communities being at highest risk because of whatever it is, whether it's wildfire or being by coastline or floodplains or whatever. That is an issue, and then California Fair is only going to get more expensive and not less expensive. So this is not only a problem right now, but it's a potential problem later. Policy might change some of it. The vacancy of insurance is going to make that a little bit more even difficult, and we're not out of the woods. So.
We're not out of the woods.
We're not out of the woods.
By far.
We may not want woods anymore. Those things catch on fire.
Please don't make any forest references on your show about insurance. So one of the things that they're posing here as some potential things that could help insurance policies or help bring insurers back is adopting more stringent building codes and safety standards, which immediately I'm like, okay, that just sounds like it costs more, which again, okay, maybe it does, but if that brings them back, it brings them back.
Yeah.
They have to maybe price risk into home sales, but that in comes DTI. And then making risk information accessible and understandable, and making people like understand what the real impact of a catastrophic event is.
Yeah.
And, I get that part, but I'm going to say this. Have you guys heard this before? We know a thing or two because we've seen a thing or two.
Yeah.
Right? You know that? Okay. So here's the thing. For years, maybe even decades, insurance companies have marketed to people as, oh, we're going to give you the warm and fuzzies. We got you covered. Yeah. So now to propose that maybe giving them more information about the outcome of a catastrophic event, it's not going to necessarily help people, because we've been accustomed and conditioned, I would say, that we're supposed to just trust that our policy is there and it's going to help us. And most people don't even read the terms and conditions of our policy.
There's that key word again, condition.
Condition.
We just keep getting conditioned.
It's funny that you bring that up, because you said people don't read their policies. Yeah, I had a client, hey, can you read my policy? What does a dwelling mean? I'm not going to say any names, but, it just goes to show you that the average consumer doesn't know what they don't know. So it's even more important to, tie your wraps with somebody that has that knowledge, that has the experience, has gone through similar situations, because they could be your eyes in the ground and actually guide you in a way that, they're talking from experience, not just theory and ideas.
Yeah. Always. Or if you have other friends that are homeowners and maybe understand, hey, ¿qué pasó? Like, hey, do you know your insurance? Y ¿Cómo te va ahí? Stuff
100%.
like that. Absolutely.
So what would you guys think about developers, builders, and investors saying about this? Switching it up as far as being able to, like, for example, they mentioned maybe relocate and, build elsewhere, but how would you feel if you're a developer and you're like, well, no, I understand that, but this is the best place based on, the landscape of the area, the prices, and how do you think they're going to feel if things change for them?
No.
I mean, it's always going to be that way, whether they're in a dense area or they're not in a dense area, or if it's rural. Okay, there's an issue of like demand, number one, and number two, if there's demand in an area, but we have to make compromises on safety, then that's another issue. Like if we can only build next to the preservation that is all wildlife preserve, and we can go right up to it, well, then that then is asking people that have demand for housing to accept that, which they will, because they need to live somewhere. But then that transfers that risk onto the homeowner, and that homeowner is relying on the insurance company to help share some of that risk. I'll give you money every month that in the event I lose my house, whatever, that risk will be covered. The reinsurers are covering the insurance companies.
Here we go.
And now the insurance company's like, yeah, I don't know that we want to do that.
Yeah.
So it's all these pieces together. It's not just one standalone thing, because they are interconnected. And it all starts upstream, of course, of what insurance companies want to offer and what's going to make the money.
And again, it's all the rising cost of construction, cost of labor. We already see our gas prices. So all these things have some correlation to go with it.
So lumber shows up on trucks. Trucks use diesel.
Yeah.